all three listed players, whether it's Hero, TVS and Bajaj, have been really slow in the electric vehicle rollout. In fact, the Bajaj Chetak electric vehicle, in the last 6 months, sales have stagnated between 600 and 700 units per month, while others like, Okinawa, Hero Electric have all gone way ahead, Ola Electric, etc. So that was the comment that he was saying that, they're going to focus big on the EV rollout. Basudeb Banerjee, the analyst at ICICI Securities, joins us now to talk about that. Basudeb, before giving us your overall picture on the sector, what are your thoughts on Bajaj Auto? Not just about the electric vehicle foray, but the management also said that there is severe distress even now in terms of volumes. Volumes have fallen quite a bit in this year. What are your thoughts? Do you think the worst of the volume pressure is behind us, or could there be more to go?
Yeah, so if you look at two-wheeler domestic market is almost down 35% cumulatively in last 3 years. And adding on to that, COVID-led lockdowns, chip shortage, rural weakness, all those things have happened. For Bajaj Auto anyways, if you look at domestic two-wheelers, X of Pulsar hardly contribute much to its EBITDA. So if those CT and Platina as a brand succumb to the ongoing weakness, it doesn't impact overall fundamentals of the business much. But the more concerning aspect is if I look at brand Pulsar volume for last 6-7 years, it has more or less been stagnating within the band of 60 to 80,000 a month. So that despite premiumization in domestic two-wheelers hasn't been picking up. That's a larger long-term issue rather than the near-term aspect. For Bajaj, yes, exports have done exceedingly well over last 12 months, so too for TVS. But again, that is also stagnating at current levels since October, November. So the background, what you said from a domestic two-wheeler market perspective, that doesn't impact Bajaj Auto much as such.
Basudeb, good morning. What about a stock like Maruti, where, there's of course now big plans. They might be a bit late in the game, but it's Maruti after all. So you think it can make up, and what would be your call on the stock?
So if you look at the press release which they came out a few days back, the whole program is going to start somewhere in FY 25-26, not in coming 12 months as such. And today, if you look at domestic electrification in the car space, it's largely via Nexon only. So the rest of the brands, the scale is much smaller. So for Maruti, which is anyway succumbing to profitability, presently operating at some 5-6% EBITDA margin, obviously they don't want to scale up and subsidize EVs to push volumes and further pressurize their profitability.
Okay, just one follow-up, sure, to what you said earlier. There has been a decline of, I think, almost about 50% that we've seen across the board, right? Whether it's commercial vehicles, two-wheelers, passenger vehicles, in terms of overall demand in this year, about 30 to 50%. What do you think could be the moves in FY23 if we do see a recovery, which is the pocket that could recover? And can you tell us which are the stocks that you are bullish on now?
No, so Sonia, the decline is not in this year. It is a cumulative decline in FY 20, 21 and 22, 3 years combined. So truck market at its peak in fiscal 19 was around 4 lakh units, and it will be around 2 lakh units in FY 22. Two-wheelers are down 35% in these 3 years combined, and PVs will be down close to 14-15% in these 3 years combined. The good part is that despite the significant rise in TCO led by commodity inflation and fuel inflation, demand has been holding on in fiscal 22 despite all adversities. People are reallocating their monthly expenditure towards personal mobility as a hygiene element rather than using mass transportation. So that's why despite this rising fuel cost, we don't see personal mobility space to decline further on this benign base of fiscal 22. But yes, the quantum of growth, which could have easily been somewhere around 12-14% in fiscal 23, might get impacted because of this steep surge in commodity like aluminium, rhodium, palladium, etc., and now also steel prices set to move up. other than the semiconductor issue resurfacing with Russia-Ukraine tensions as such.
Basudeb, just hold on. Just address the pre-opening and take the 9-10 calls, and then we'll come back to you. The pre-open has settled about 90 points higher on the Nifty and about 280 points higher on the Bank Nifty. So looks like that momentum is going to continue. A couple of commodity stocks like Tata Steel, Hindalco doing well. So Darshan, if we open here, you maintain that you trade the Nifty, perhaps avoid the Bank Nifty, and what's your 9-10 call?
Yeah, that's right. Keep long positions in the Nifty and add to your positions or start new ones on any dip or consolidation. Buy LTTS, L&T Technology Services with a stop under 47.20.
L&T Technology Services is a buy coming in from Sudarshan. Basudeb is still with us, so just to go back to him. Basudeb, so just to pick up on that point, you said aluminum, rhodium, palladium, steel, everything is up, right? Compared to where we ended third quarter. So do you expect significant margin pressure, maybe not in Q4, but with the quarter's lag, so maybe in Q1? And will companies kind of warn on margins when we get numbers for Q4?
Surely, as you rightly mentioned, if you look at the quantum of rise in aluminium, it's like almost from $2,600 a ton to $3,500 a ton. So it's almost 35-40% increase over last 3 months. And now we are seeing so many articles that coking coal cost, iron ore prices have been increasing, which can push steel prices further up. So which are the key constituents of the input commodities for a vehicle? So we came out with a note recently on this aspect, and as you mentioned, rightly pointed out, that bulk of the damage should get reflected in fiscal 23 first half. And as you can see, Maruti, Tata Motors, Mahindra, etc., typically the tendency to hike prices at one tranche is not more than 2.5% at best. So even if you take 2 such incremental tranches of 2% price hikes, still we estimate gross margin impact incrementally can be further 200 to 300 basis points. A matter of fact is that today companies are already operating at suboptimal gross margin or EBITDA margin, and operating leverage benefit is not that significant. So under that background, if you see further 200-300 basis points impact on gross margin, then profitability for next 3 quarters will be under significant stress. But in the longer run, if you see the penetration levels for both cars, LCVs, premiumization scope in two-wheelers, yes, 1 more year of free cash flow impact should not impact your overall valuation significantly. So if you look at auto index is down somewhere around 15% from these heights. So yes, market is efficiently looking at that. This margin damage is more of a 1-year phenomena rather than a structural aspect.
Okay, just one quick question. Because of what's happening in China, the COVID cases, the supply side issues, any auto companies that would get impacted in the near-term earnings?
So if you look at from a lockdown aspect in China, the logistical issues coming up, and so many input commodities, input components are dependent on China. So if there is a delay of logistics by 15 days or a month, definitely it's not only one specific company. Most of them will suffer who are procuring components or commodities from China per se.
Okay.
Okay, Basudeb, thanks a lot for joining us. Well, there's a listing now we have of the residual business from GMR.